have joining us Sanjeev Bikhchandani, founder and executive vice chairman at InfoEdge. Sanjeev, thank you very much for joining us on ET Now. Um, how do you sum up 2025 from a valuation point of view for startups?
Um, so more than valuations, I think the big thing was the number of IPOs that happened. And I think India has clearly emerged as the number one IPO public market in the world for a certain size and scale of company. If you are above $4 billion, NASDAQ will give you a listing. But below $4 billion market cap, there's only one market in the world, and that's India. And actually, this is a strategic asset for the Indian economy, the government of India, the Indian startup ecosystem. We should, in fact, welcome overseas startups coming and listing in India because they don't have too many options. Because if you're less than $4 billion, NASDAQ is not really an option. So India can emerge as the global startup IPO market in the world below $4 billion, and which is actually a very large segment.
Sanjeev, also, when we look at last few years, we started off in 22, 23 when startups started listing at valuations which were very frothy in nature. There has been tone down in valuation coming into the startup ecosystem as well, and the way they are now listing on the stock exchanges or at a valuation which is much more respected by the market now. But do you think that this valuation will sustain, and are the metrics to judge a startup also changing over the last has changed over the last few years?
I think, look, what public markets do and what public market scrutiny, what regulatory scrutiny, what public market investors bring to a company that has gone public is a certain amount of fiscal discipline, a certain amount of, requirement to either make profit now or pretty soon, right? This leads to more prudent commercial decision making within startups, and I think it's good. I noticed in your infographic you had said Zepto will list. Now, if Zepto lists and Eternal is listed, and so is Swiggy, you will find that all the three large instant commerce, quick commerce companies have listed, and you will get more prudence coming in, commercial prudence into the functioning of these companies. Already Eternal is very prudent. Swiggy is listed also, therefore is subject to the same sort of public market discipline. It'll be good if Zepto also gets there.
How do you judge, I want to come back on the valuation part with you. How do you judge some of these startups? Is cash flows is now something that the investors are looking very closely for companies that are coming to the public markets?
Yes, public market investors have always said, it's okay if you're loss making today, but you should have a path to profit and you should get a profit in 2 or 3 years. That's what both Zomato and Policybazaar promised and delivered. And therefore, their valuations are where they are. So market values financial performance, both in terms of top line and bottom line, public market that is, which private markets are perhaps a little more lenient on. And therefore, I think companies getting to profit, wanting to get to profit, focusing on cash flow, focusing on revenue, focusing on unit economics, all these are good things. And the valuation, the market gives will reflect your performance and your potential, and that's fine.
You look at the food delivery and the quick commerce market very closely. Between the three companies, with Eternal, Swiggy, and Zepto, they now have nearly 40,000 odd crores in cash on the books. How do you think this cash will be deployed? Is it going to be again a burning exercise for cash, or you're going to see good returns coming in wherever they are investing?
See, without commenting on specific companies, and certainly not Eternal because I'm on the board and it's a blackout period and I'm not allowed to comment on it, I would say in general, you may have cash on the balance sheet, but if you're listed, you can't burn it endlessly and expect the market to reward you unless there's a game plan which you can tell investors that this is the game plan, this is why I'm burning. And this is the end game. Without that, it's going to be hard to justify and get your valuation and get your next round of funding raised if you want that next round. So these are things that, companies will have to be careful about.
You spoke about Zepto. And Zepto has filed a confidential filing there. Do you think this entire market of eternal Swiggy and Zepto, and as and when Zepto lists on the stock exchanges, it's going to bring in more discipline with respect to the kind of quick commerce and the delivery platforms, how they manage the entire ecosystem?
I definitely think that if when you're listed, there is more pressure on you to be fiscally disciplined, and companies respond, smart managements respond. And I think we'll see that happening if Zepto does this. And if it does this, I think it is, it's good for the industry, it's good for the company, it's good for shareholders.
And do you see this segment also moving to an omni-channel, because we saw Swiggy moving, setting up an offline store as well? Is that the way that you see this segment also moving
I think
beyond
that
online?
I think that is one experiment that Swiggy is doing. I do not know what the outcome will be. I mean, the promise of quick commerce is that we will deliver from a dark store with low real estate costs. We'll deliver from a dark store within a kilometer of your residence, and you don't have to deal with traffic and parking, and now that fundamental promise is sort of belied if you start opening physical stores. And in general, quick commerce sells known branded products where you don't really need to inspect the goods before you buy them. So I'm not sure it's a worthwhile experiment. Of course, as an industry watcher, industry participant, we are keeping an eye on it, and we will see how to respond if it begins to work at Eternal. But I personally don't think that this is going to be a scale-up model in a hurry. But look, this is my personal view. We've not discussed the Eternal board, and it's not the Eternal point of view.
Mhm. Sanjeev, you've been one of the key investors in many startups. Today, when you look at many of them that come to you with term sheets, what is it that you're looking at them? Of course, business model is one of them. From a valuation point of view, are valuations rich, or are the founders asking much higher valuation for the businesses?
Look, valuations have come back. No two ways about it, especially in seed and Series A, where you have a competitive situation with several investors vying for a good company. So valuations do tend to go up. But the market is also larger than it was 10 years ago or 15 years ago, and therefore the outcomes perhaps will be larger than people had expected 10 years ago. And therefore, it's not as if valuations are absurd, but yes, there is a competitive situation among investors for good companies.
And is capital adequately available for the startups, or is that pool as well narrowed a bit, and so there is selective, capital funding which is happening for startups?
No, capital funding is selective. It is more selective than it was 5 years ago. And that's a good thing for the market, for the investors, for the companies. Now, having said that, good companies have never been short of capital and will never be short of capital. So really, it's a question of quality of business and founders.
And which are the sectors that you see are much emerging now? We saw a lot of platform companies coming in, but in the last couple of years, you have AI companies also, coming in. There's one AI company, which is expected to list as well in the next couple of quarters as well. How do you see some of the emerging sectors, and where is the interest coming in for the investors?
So look, we don't do it sector-wise. We do it bottom-up. We look at about 1,000 companies a quarter, invest in maybe 3 or 4 every quarter, and we see what's bubbling up from the bottom. But what we are seeing, I think AI is going everywhere. What we are also seeing is that VCs are beginning to look at stuff that is day after tomorrow's technology, basically around deep tech, and which is actually real venture investing. You're taking a risk, you're being discerning about technology and founders, and then going in and then working with those companies. So you're seeing that kind of stuff happening. I think the government has given a big push to deep tech by announcing a 1 lakh crore fund and another 10,000 crore fund of funds. So real venture funding is happening.
I just wanted to understand your perspective of how you look at some of the companies which are coming with deep tech and AI as their core. what is the metrics that you're using to look at them from a growth, scalability, and valuation point of view?
So look, and at the very beginning, when you're just starting out and you're doing the technology that is real frontier, uh, you essentially evaluate the founding team and how good they are and whether they can do it or not, because the technology itself is unproven. So you're taking a technology risk and a team risk. Um, and therefore, the valuations will not be very high. But at the same time, we don't want to leave the founding team with too little skin in the game. Because by the time the second round, third round, and fourth round happens, they cannot be down to single digit shareholding. That would not be a good idea for anybody. And therefore, it's somewhere in the middle where you are taking a judgment call and then working with the companies.
And is that the only thing, or you are also looking at the scalability of that, or specific cases in AI, because it's such a broad
Scalability,
area? Uh,
see, scalability is hard to predict over a 10-year perspective, right? When I recall, when we did our Series A with ICICI Venture, our own projections showed that we would do 12 crores a year, 4 years out in revenue. 4 years out, we ended up doing 84 crores. We had underestimated the market. So when new markets are being created, new technologies are brought to the market or are being developed, scalability and scale 4, 5, 8 years out is difficult to predict. It's a spreadsheet.
2025 has been a good year with respect to the kind of companies that came in for listing. You had Grow from the capital markets, you had Lenskart, Misho, Pine Labs, Ether, Urban Company, Wakefit, Aquus. Uh, what do you see, or which is the company that you're watching out for in 2026 from a perspective of how that company will be listing, especially in the startup space?
Well, look, we only know our companies. So we have a couple of companies in the pipeline. I think Shiprocket has filed its DRHP. And let's see what happens there. That's one thing we're watching with interest, because we are invested in the company. But I think so long as the markets stay intact, I think you're going to see even more and more startup IPOs happening. I think you will see sensible valuations. I think you will see prudent business practices coming in after companies list. So these are companies that are growing up.
FI flows are no longer a criteria for an IPO market, because we've seen this year that while they've been net sellers in the secondary market, they've been buyers for IPOs, new paper, either through QIP or through block deals. Uh, do you see that as any secondary market performance as any reason for IPOs not taking off in 2026, because that primary market is now evolved into such a big market where FIs are taking decisions independent of what's happening in the secondary market?
No, I think there is enough capital flow, whether it's domestic or it's overseas. I think what we have seen is that domestic capital has really kept the market up, no matter what happens to FII flows. So I think the IPO market will be robust, irrespective of FIIs, whether they come in or they don't.
And what is it that you will watch out for from a person, industry veteran, for in 2026 with respect to, I know you have your own investments, but from industry perspective, which are the IPOs that you would like to look at?
I've not actually studied that, because we only study our companies that are in the pipeline or we are investing in. So I've not really looked at other companies. But look, there are several VC funded startups, some non-VC funded startups. I think anybody who's hit a 200, 300 crore turnover has IPO dreams, if they're also growing. So I think we're going to see enough IPOs happening.
Sanjeev, I also wanted to get your thoughts on the entire AI piece there. You said there's a lot of, quite a few startups that you're looking at as well. Where do you think India is in the entire AI game? And do we have enough startups or companies that are doing quality AI work?
So it's like this. There are three layers in AI. One is the foundational models. The second is the infrastructure. And the third is the app layer. So I think in the app layer, we've got enough and more companies, right? Foundational models are few and far between. Infrastructure, again, some stuff is happening, but not enough. The MeitY and the government of India does have a program, and hopefully that will yield results in the foreseeable future. And we'll see ourselves getting, our oar in both in foundational models and in infrastructure. But we've got some distance to travel there.
And are you seeing a lot of new startups now coming in from smaller towns as well?
That is happening. I think entrepreneurship is atomistic. It can happen anywhere. I think what we are seeing is the aspirations of everyone, all young people in India, are roughly similar. No matter where you live, which city, which town, your aspirations are similar. So everyone's trying, and that's a good thing.
Hmm. And if you were to guide some of the investors who would be investing in many of the IPOs, uh, what should be the thing that they should be looking at from a point of view of investing on the startup IPOs when they come in 2026?
I think look at quality of governance, quality of management first. Therefore, quality of disclosures, right? That's really important for a medium-term, appreciation of share price in the IPO market, of post-IPO. I think look at robustness of business model. Look at invest behind clear market leaders. That's really important.
I just want to come back on the AI part as well. Who are the best, leading AI companies according to you, and who can surprise us with respect to the kind of offering they do?
Look, I have not studied the IPO market in AI companies. I think AI companies are by and large still early. I think there are AI first companies, and there are companies who are not AI first but are using AI uh, to improve their business, to run better. We'll see many of the second kind. AI first companies may take a little time to scale and come to the IPO market. We've invested in a company called Gyani, for example, which does voice chatbots with their own tech stack. They're not relying on external tech stack. That gives them a cost advantage. Allows them to look at local languages. They've also been shortlisted by MeitY to be part of of India's AI thrust. So there are companies doing original work, but it'll take a little time to come to the IPO.
I'm talking from a startup ecosystem and not the companies which are coming to IPO, because
So that
you look at a lot of companies, which are the ones which looks interesting to you and
no, I
are
can't
promising.
I can't name companies just yet, but I have named Gyani.ai. I think it's doing interesting work. There are a couple of others. We keep looking at them.
And do you see these companies talking about skill sets, manpower, which are AI, proficient in that sense? Is there enough manpower for that kind of a vertical in India?
See, companies that are doing AI don't typically require a lot of headcount. At least not now. So I don't see a shortage of manpower. Nobody's talking about it. Nobody's come and said we can't find people because we need 2,000 people. They need about 20 people, 30 people, and they can find those.
Hmm. And I just wanted to bring in the Indian IT sector as well, because the IT sector itself has been hit badly this year, because it seems that the investors believe Indian IT is not geared for the AI trade. What is your view on that?
Look, the Indian IT sector uh, has faced challenges earlier and has adapted and evolved, right? Uh, People running Indian IT companies are smart people. They'll figure it out. Already there's enough adaptation and evolution happening. It may take a year or two, but it'll get done. So I'm medium-term optimistic.
And so the the pessimism around the Indian IT is overdone. You think?
Well, I think nobody really knows. But all I'm saying is I'm betting on the fact that whether it's a Infosys or a HCL or a Wipro or TCS or any other Indian IT company, They are smart people who are running them. And they are continuously adapting, evolving, and they'll figure it out.
Sanjeev, my final question to you is with respect to your predictions for 2026. From a startup universe, what is your predictions? Maybe top 3 or 4 predictions that you see.
Well, I think the startup activity in India will continue. I think what the government has done with the Startup India program, with the Fund of Funds program, is quite remarkable over the last 10 years. So startup activity will continue. I think there's enough funding which is coming in both from overseas and from domestic sources and at all stages, whether it's at the friends and family, angel, micro VCs, Series A, Series B, seed capital, all of that is happening. So I think funding environment will be robust. I think startup activity will be robust. I think if all goes well, the IPO market will be robust because you see, one of the things that India lacked until 2 years ago was that there were not enough exits for VC investors in startups simply because strategic sales were not happening at any kind of valuation that would give a VC investor joy. Uh, Strategic sales are still not happening at high valuations, but IPOs are happening. And that's a good development because it means VC investors have an exit. And if VC investors have good exits, it means more VC will come in. And that's how the cycle will continue. So I'm hoping that the good things of 2025 continue.
Sanjeev, it was a pleasure talking to you today. Thank you very much for joining us on ET Now.
Thank you so much.